As a business owner, I think it's important that you understand why you're taxed a certain way, why that's important to you. I'm going to give you the basics that are going to help you understand what you should be thinking about, that it's going to help you save some money, whether it be a C corporation or an S corporation or an LLC, and what the impact of all of those decisions will make. By the way, I'm Jerry, the tax guy, the man with the plan. Let's head over to the whiteboard and I'm going to teach you some things about taxes. So we're talking about S-Corps, C-Corps, LLCs. What are the considerations? What makes the most sense for you? But before we get into that, I think it's important to understand some basic definitions. LLC, limited liability company. That's what that stands for. That allows you to make elections. You can elect to be taxed a certain way. So it's a flow-through business and it's a limited liability company. Okay. Number two, incorporated, Inc., C-Corps, S-Corps. What are the difference? C corporation is your regular corporation. It's got double taxation attached to it, which we're going to talk about here coming up. An S corporation is an election. You need to make that election. That is a flow-through business, okay? So doesn't have its own standalone tax structure. The taxes are paid at the shareholder level. Three, when I talk about wage, what am I talking about? I'm talking about W-2. That's the same as if you're working for an employer. The only difference is you're the employee and the employer in this situation. So that's wage. And number four, distributions. And again, wage and distributions fall under the owner's pay category. How you're going to pay yourself as a business owner. But distributions, they're different for a C Corp and an S Corp. A C Corp, it's a dividend. This is the double taxation piece. This is paid out of profits that have been previously taxed. An S corporation, okay, that distribution is paid out of profits, but it's only got one level of tax. It's only taxed at the shareholder level. So now let's jump into a little bit more specific, those considerations that we were talking about as it relates to these various entity structures. All right, so we went through the definitions. Now we're going to talk about some of the considerations, some of the things you should be thinking about when you're making that decision on, hey, how am I supposed to be taxed? In an LLC, is it an S-Corp? Is it a C-Corp? Okay, on the basic side, I look at 5 basic things. I'm looking at the rules. I'm looking at entity level tax. I'm looking at owner's pay, how the owner pays themselves. I'm looking at QBI, and I'm looking at the number of owners in this entity, in this business. Okay, so rules. What I'm looking at here is number of shareholders. Is there a foreign owner? Certain things you don't have the ability to do. You have to keep minutes with an incorporated business with your S-Corp and your C-Corp. You don't have to do that with an LLC. It's got some administrative efficiency related to it. Okay, so those are the rules that I'm thinking about and considering. Entity tax, entity level tax. Important to know, an LLC and an S corporation, those are flow-through businesses, okay? Unless you make an election within the LLC to be taxed as a C corporation. The C corporation has an entity level tax attached to it. This is where you might hear double taxation. The entity is taxed, then dividends can be paid out, and they get double taxed. Okay, so they get taxed at the shareholder level, hence the double taxation. That's a key when you're thinking about tax efficiency. An S corporation does not have that entity level tax. It is a flow-through tax. It's a shareholder level tax only. There's no entity level tax attached to it. Now the biggest one, owner's pay. How are you going to pay yourself? Vitally important. That's why you're in business for yourself. You're trying to figure out, hey, how am I going to pay myself most efficiently? There's a couple different ways. You have wage, compensation. That's the W-2 piece of it. Then you have the profits. How are you paying yourself out of the profits as an owner? If you're a C corporation, it's a dividend. It's based on percentage of ownership, and it's got a double taxation attached to it. S corporation, the distribution, that's a shareholder level tax only. So there's no double taxation attached to that. Along with that, I'm making considerations related to retirement plans. Any one of these structures has 401ks and simples and SEPs, so there's profit sharing. So there's not necessarily a deficiency as it relates to availability for retirement plan. How it's funded though, that has an impact here. And owner's pay, your wage, is where that's gonna be impactful, okay? Next one, another big one, is something called QBI, Qualified Business Income. It's a deduction that's available only for flow through entities. So only for basically your LLC flow through or your S corporation. It does not exist at the C Corp level. There's no what we'll call QBI at the C Corp level. So it's an extra layer of deduction that's available to you. Again, adding to the tax efficiency. Last one on the list, number 5, number of owners. Depending on how many people are involved in it with ownership in the company, that's another factor that you need to take into consideration. Depending on the entity choice, there's flexibility and rigidity based on how many owners you have. If it's a single owner, it's a little bit easier structure than if you have multiple owners. Multiple owners, you just have to be careful. If it's a S-Corp, there is some rigidity that you really need to be following in terms of ownership percentage. So there you have it. You've got the facts. Now I'm going to help you decide what's best for you. What is best for you? Well, no two businesses are alike. No two owners are alike. Everybody is a little bit different. Everybody's got a different purpose. As part of our Ascend 360 process here, we take you through a tax feasibility that's going to help determine what is the best entity for you, what's going to solve your entity problem, saving tax, retirement plan, whatever that might be, let us help. If you want to learn more about our Ascend 360 process, check out the description. If you want to learn more about taxes from the tax guy, check out this video here. And we will see you in the next video.